It's the Loan Show on KSRO with George Adair. Call in with your questions now at 636-1350.
Hey, good afternoon, Sonoma County. This is George Adair. Thank you for tuning in to the Loan Show on KSRO 1350. Hey, this is the show where we discuss everything mortgage, how it impacts your life, and how to improve your personal balance sheet. Hey, we're going to be taking some questions today. You've got the email line, and we've also got our Facebook page. We had posted some stuff in the last few weeks on Facebook, so it'd be good for you to check that out. That's facebook.com/Bay Equity Loans. Sorry, I forgot which one it is. I've got a couple of them. Don't want you to see the one with my kids plastered all over it. So anyways, that would be facebook.com/Bay Equity Loans. So check us out on that page and like us if you like us. Get that? Like us if you like us. Hey, again, I'm George Adair. I am a licensed real estate broker, and I hold an NMLS license to originate loans. I've been doing this for many, many moons, and I'm a third-generation real estate and mortgage guy. You know, my grandfather was a licensed contractor, an MAI appraiser, and a real estate broker.
Wow. Covered everything.
Yeah, he had it all covered, but he died at 66. He was a stressed out man, so I'm trying not to be so stressful.
Just focusing on one area.
Yeah, well, I try to focus on two areas. One is doing loans, and the other is mountain biking at Annandale.
Nice.
Kind of a mountain bike junkie.
All right. Well, that can reduce some stress too.
It adds some stress when I fall, which tends to happen. I've got the scars to prove it. But anyways, we're not here to talk about my follies on the mountain bike. But I am interested in talking about that with you if you ever want to. Hey, you can reach me. I'm in downtown Santa Rosa, Michelle. You know, my office is down on the corner of 4th and E Street.
Yeah, it's really easy to find.
Yeah, right across from the library. So we're down there, and we get a lot of walk-in traffic lately. I think the show has something to do with it. I'm finding that I'm taking more calls off the air than I am on the air, which is okay. So that's why I like to give out all of our information on how to get a hold of us. Our number at Bay Equity Home Loans is 583-8100. So call us for an appointment at 583-8100. Drop in and say hi, and let's see if we can answer some of your questions too. Okay, I try to keep it relevant. I try and keep it fresh. I want to talk about some really interesting statistics that have evolved out of the housing debacle, out of the Great Recession. And I'm going to call this sort of the perfect storm. There's this storm brewing from a depreciation in home values and also a flattening of interest rates that's really been predominant over the last couple of years. And that, in my opinion, makes a great buying opportunity, not just for first-time home buyers. That's sort of obvious. I mean, if you're renting and you're paying $1,600 a month, you should be buying a house for $200,000 a month, writing off the depreciation and the interest and your county taxes, and then actually building wealth for maybe the first time in your life. You know, over half of Americans only have a couple $1,000s to their name. It's pretty sad. So it's a scary place to be if you don't have any wealth when you're in your 30s and 40s and 50s, especially if there's a calamity. And I get folks who come in my office all the time that are just average folks. We'll talk a little bit about some of those people here on the show today, but they're average folks, and in general, they found an opportunity to go buy real estate, use whatever cash that they have that maybe they took out of the stock market because the stock market's fragile. You don't want to turn on CNBC and take stock advice, because it's so fluid. And what is it? Over 50% of all trading activity is electronic, robo trading type stuff. So a more predictable place to put your money today, in many experts' opinions, is in the housing market. We've experienced a tremendous drop. And so this perfect storm has really created an opportunity for investors to get in with pretty low down payment requirements to go ahead and get good financing. Interest rates are really low. Today, I talked to an investor who has multiple properties, and we're going to refinance him into a couple 15-year fixed loans at 4% because they're investor properties, no points. That's really aggressive. He'll have those things paid off. It's just as good as putting money in your retirement account. And it's a little more stable than putting it in the stock market, in my opinion. Bonds are also kind of a scary place for some people. And all this trouble that's happening in Europe, you know why? They're reneging on bonds.
Yeah.
About the only good bond in the world right now, some of the European countries and the U.S. Treasuries are still good, but they don't pay very well. So putting your money into the real estate market is really a great place to do that. So we're at Bay Equity Home Loans, always helping people, giving them good advice on how to do that. We can sync you up with a good real estate agent that can also give you some good market information. And we welcome you to drop in at our office there down on the corner of 4th and E, or call us at 583-8100. So one of the biggest incentives to buying real estate is that you're going to have a tenant pay the mortgage for you. So if you have a tenant and they're paying your mortgage and you've put your money into the property and it cash flows, you're not losing anything. That's why it's so stable. You only lose if you need to sell or refinance a property in a down housing market. I already think we're pretty far down.
Yeah, it seems like we've hit bottom pretty
in a lot
close.
of areas we have.
Yeah.
I really feel like we have. I talk about sort of the compression of the market, where you have a floor from the median home prices that's been reached, and they even kind of go up because demand increases for the houses in that price range around 200 to 300,000. And the investment property owners are really the ones benefiting, because vacancy rates, I should say, are really low, which is good for an investment market. We have some numbers here that I think are really interesting, that really tell the tale, and make you ask, why haven't you purchased your non-owner occupied house yet? It's a good time to do that. Census Bureau reports that the rental vacancy rate fell to 9.4% in the fourth quarter of 2011 from 9.8 in the prior quarter. So basically, there's about 0.5% improvement for investors. Vacancy rate falls, which means they're keeping their houses rented. Mm-hmm. There's a high demand for rental property. A lot of folks, a lot of blue-collar workers, a lot of white-collar workers, a lot of folks that lost their homes have families, and they still have income. They just couldn't afford their adjustable rate mortgages anymore, or they walked away, did a strategic default, which is walking away from your house knowing that you could afford it, but you were $200,000 underwater. And it's kind of crazy to sit there and pay a mortgage for $4,000 or $5,000 a month in a house in Fountain Grove that you bought for $1 million and it's worth $650 today, and a lot of people walked away from that. So those people still making $70,000, $80,000, $100,000 a year, they need a place to live. So there's a market to give them a place. Pretty good market rents are up, actually. Rental payments jumped up 2.5% in 2011. These are nationwide statistics, and I think that they've even done a little bit better here locally. So in a marketplace where there's a strong demand for rental housing, where interest rates are really, really low, you can get 15 and 30-year fixed rates at around 4%, 30-year fixed rates around 4.5%, and home prices have probably flattened in that median home price range of 150 to 250,000 condos and houses. You should be taking advantage of the perfect storm. Get your money out of your mattress. I know it's in there. Dig it out. Go find it. Take it out of the bank account. Go put it into a house. It's a really important time to be doing that. There are multiple incentives to buying in a depressed housing market, besides just. Let me say that a little differently. It doesn't matter whether it's depressed or not. There's multiple incentives to buying a house, an investment house. We happen to be in a depressed market, so it makes it a little bit easier. So with those incentives, you've got tax liability benefits. Your interest are deductible. Your losses on the property are deductible. Capital improvements are deductible. You're going to want to talk to your CPA if you've never owned real estate before. Talk to your CPA and get an idea of how it can help you. But it's something that does help a lot of people. So I'm working with this client of mine. I actually go way back with this person. We just happened to find each other actually through this radio show. He's a retired teacher, and he is in a really great position. I was really impressed to see. You hear about teachers and how they've struggled. And they don't make a lot of money, and they're such an important part of our world and our society. So this a fantastic teacher. I actually had him for 2 years in high school, he bought an acquired property over the last several years, and that is his nest egg. And he's done a great job with it.
Great.
And he's on a fixed income. He's retired, and he's got these properties, and they're cash flowing. He's not really making a lot of money from them, but he's an example of how you can get into a property without a whole lot of money, and find your way towards your nest egg. Maybe you lost some money in the stock market, or your 401k has been depressed over the last several years. Forget the last quarter, folks. I know that the stock market has done exceptionally well over the last 4 months, actually. That should not be all of a sudden dictate your new financial strategy. That is not a long-term. There's not a lot of long-term strength.
Yeah, it seems like people react really quickly to things. And in investing, do you react quickly, or should you not be reacting quickly?
Yeah, it's sort of your risk coefficient. What do you feel is the best place for you to put your money relative to anticipated return? So we're going to jump into our next segment. We're going to talk about returns. I'm going to give you some numbers and give you some ideas on what kind of returns you can expect. Probably take an email or two. It looks like that they came in. And I want to remind you to reach us in a couple of different ways. Facebook.com/Bay Equity Loans. Check us out there. Like us. This is a community show. I talked to a lot of you. You all appreciate how great this show is for you. Tell us about that. Get on Facebook. Pose your questions on Facebook so everybody can see them, and then I can reply. That's just a really great way to communicate with us. Also, you can reach us at our office down there at 583-8100. That's 583-8100. Finally, we have a text line. I've talked about this a little bit before in the past. If you want to get some information about current rates, or you want to take advantage of some of the promotions that we do, like our free appraisal promotion, you can text us use the word home loan. That's all one word, no space. And the number is 41411. We're going to go to break. I want you all to stick around for us. It's not a long show, but we do have a couple commercials in here. We'll be back in just a minute. This is George Adair with The Loan Show on KSRO. Hey there, Sonoma County. If you're paying over 5% for your mortgage, or maybe you're underwater with your mortgage, you need to stop and listen to this message. I'm George Adair with Bay Equity Home Loans here in Santa Rosa. We're helping homeowners save hundreds every month and thousands every year. We're offering a fixed rate loan at 4.125%, and best of all, it's at 0 points. You heard me right, 4% fixed rate at 0 points. Call Bay Equity today at 583-8100. Don't delay. Call us today at 583-8100. We can show you how refinancing into a low fixed rate can save you thousands on your mortgage. Please call 583-8100 and call and ask about the new refinance program for homes that are underwater. The time for a low fixed rate home loan is now. Bay Equity is your home for loans. Call us at 583-8100.
30-year fixed rate APR 4.31. Licensed by the Department of Corporations, number 6053919. NMLS number 238915. Equal housing lender.
Dollar Drug, your local compounding pharmacy in the G&G Shopping Center, is pleased to offer bioidentical hormone replacement consultations. For years, you've counted on Dollar Drug to help fill all your medication and prescription needs, including over-the-counter medications, ostomy supplies, diabetic supplies, compounded medications, including bioidentical hormones, plus compounding veterinary prescriptions for your pets. Isn't it nice to know the same business you've come to trust to fill your medication and prescription needs also offers bioidentical hormone replacement consultations? Dollar Drug is dedicated to making your trip to the pharmacy a pleasant experience, with the pharmacists working closely with you and your doctor to ensure you feel well informed. Whether it's to transfer, refill an existing, or fill a brand new prescription for you or your pet, you can count on Dollar Drug Compounding Pharmacy in the G&G Shopping Center on West College Avenue in Santa Rosa.
These days, it's important to consider how to improve the value of your home. Thankfully, it's as easy as a call to DJ's Sash and Glass. Maybe upgrade the look of your home, increase energy efficiency, or just lighten up a room. Your choice is clear. It's DJ's Sash and Glass. In just one day, they can replace those drafty old windows with energy-saving vinyl windows, replace old patio doors, install a skylight, open up a room with stylish mirrors. Your options are endless. DJ's Sash and Glass Glass is also well known for their beautiful tub and heavy glass shower enclosures. Or business owners, improve the look of your commercial storefront. For the best price,